Okay, thank you.
You'll be fine.
Okay. Does it have to be in my mouth like that? Or?
Thank you for coming tonight. For me, I hate this weather. It's dark when when you're trying to get here, and I don't like it. But we have three fantastic companies tonight, so please pay attention. They're great stories. And again, thank you for coming. Now I'm going to let Sophie take over, and you guys can listen to her.
Guys, there's plenty of seats up front, if you want to join us. So hi, everyone. You usually know me with working with Paul, but tonight I'm here with Canadian North Resources with my colleague, Dr. Trevor Boyd. Trevor is our VP Exploration, and I handle corporate development for Canadian North. So I know some of you already know the story. Just going to give you a quick overview, and then Trevor will give you the more technical mineral resource. If you can hold your questions, Frank, for the end. And and then we can answer any questions you guys may have. So this is actually our property. This is the Ferguson Lake project. We may be making some forward-looking statements. So let me tell you a little bit about Canadian North Resources. We're located in Nunavut in northern Canada, and we are mining for critical minerals. So copper, nickel, cobalt, palladium, platinum, PGMs, and rhodium. Why do we think Canadian North is such a great story? Well, let me tell you, it's everything that we've been able to accomplish in the last 18 months since going public. We went public in April of 2022, and immediately after going public, we announced that our plans were to update an historical 43-101, and we did that by July. What's really important about the 43-101, and Trevor's going to go into in depth. There was a historical one. What differs with ours is that it takes open pit into account, as well it takes the PGM group into account, which the previous one did not. What else did we do? Well, we expanded our land package. We had 96 somewhat square kilometers, and we took it to just under 254 square kilometers. As well, we planned 2 aggressive drill programs in 2022 and 2023. We surpassed what we thought we were going to drill, and we drilled 39,270 meters. And let me tell you, that's not a small feat in northern Canada. So a little bit about where we're located. So this is Nunavut. I know this is a little bit small, but you can see here, there's a lot of big players in the area. So we have Glencore, we have MMG. We're located here. This is the Ferguson Lake project. We are 190 kilometers away from Baker Lake. And just to give you guys some idea about the area and how this is an emerging mining district. See these 3 yellow triangles? That's owned by Agnico Eagle, another major in the area. And those 3 mines have actually been put into production in the last 10 years. So it gives you an idea. In terms of our relationship with the local community, I would say we have an excellent relationship. We have open communication. We consult with them regularly. We hire from the local workforce, and not just laborers. We have skilled technicians on site. And as well, just in the last 2 years, we've won in a row something called the DIG Exploration Grant. And that is just for exploration. That was given to us by the local government, not by the federal government. And it was a total of $500,000 that they gave to us. Here you can see where we have our active mining leases. That was the original 97 square kilometers. And this is what we claimed around it in exploration claims.
Just quickly, the Raglan nickel mine is just on the other side of Hudson's Bay.
Oh, there we go. And
Yeah.
also,
Yeah.
Canadian royalties. So it's a new story because we just listed, but it is by far a new project. Inco put it into production in the they discovered it in the 1950s. There's no production done on this. And then more recently, Starfield Resources, which some of you may know, had the project from 1999 until 2012. In 2013, we took it out of receivership. We held on to it in a private company, and then decided in 2020, the camp was kept on care and maintenance. And then in 2020, we decided, it was in the midst of COVID, we could only send a skeleton team up, but the skeleton team went up. And then in 2021, we started our drill programs. So what does that look like? So there's been over 90 million spent. That's 200,000 meters drilled in about 700 holes. And that was spent on exploration, metallurgy, and infrastructure. And this is one of my favorite slides to talk about. This is our infrastructure. This is not like any other juniors in the area, or I would say in almost anywhere. So this is actually our project. There's an 825-meter gravel runway that can land a Dash 7. It did land a Dash 7 this drill season. We had it bring up supplies. This is the camp. All of these buildings are interconnected, 55-person camp. This year we had 45 people up there. What does that look like? That's 4 drill crews, a full geo crew, and then obviously kitchen staff and some laborers, maintenance. When we acquired the project, we got all of this, including all of that heavy machinery. So that all came to us. What have we added? Well, we've added 5 drills, which has allowed us to drill 4. We run 4 drills at one time, and 1 goes into maintenance, and then we rotate that. That, with our own drill team up there, allows us to adhere by our schedule and not someone else's. So that's great for us, and that's one of the reasons we were able to do so much drilling. We also upgraded the satellite network, and to be honest, Trevor's Zooms from up there are better than from downtown Toronto, so I much prefer that when I have to get him on a call. And what's really important is all this. This is the core that we acquired from Starfield Resources. It was impeccably preserved. That is what we were able to use to update the historical 43-101. So all of that, well, about 90-95%, Trevor tells me we were able to use for that. So now I'll hand it over to Trevor. He's going to talk a little bit about our resource.
So basically, this is the resource, and the main takeaway from here is that this is a resource, is a reevaluation of the historical database and the historical resource, which was originally filed by Starfield Resources in 2012 in their PEA. In their PEA, they did not take into account the value of the platinum and palladium in their cutoff grades. They also, or in their economics, they also envisioned a totally underground deposit with all the high costs involved with that. When we did our reevaluation, we did a considerable amount of resampling of that preserved core, and as a result, we came up with a resource which was 70% greater tonnage and about 55% greater metal content to that historical number, the exactly same database. So, and as you can see, the parameters for defining that resource is on the left there, and you can see that the metal prices are pretty much the same as in July 2022, except for palladium, which has taken a hit. And as you can see, because of this positivity of adding this additional resource and having a open pit scenario with a lower cutoff grade, we are able to include much wider zones, and with that much wider zones, we were able to increase that tonnage. So, this is the plan view of the body based on the updated modeling. And what it did is it opened up at less than 200 meters. These are the whittle pits defining the open pits. Showed that the west zone in particular is wide open further to the west and to the east, out into the lake at depths of less than 200 meters. And that's true for the east zone here as well. Same thing. And this is the CN Tower right there.
I always love to point that out because that gives you an idea. This is the CN Tower. That gives you an idea of the scale of the mineral resource that we currently have on it. So we're talking large scale. And just to be clear, that this area here that is planned, that's only 6 kilometers. We believe that the mineralized zone goes from, I would say, 15 to 18 square kilometers. So there's a lot of blue sky potential here for us.
So what it basically did is generate a whole bunch of very, very low-hanging fruit in terms of drill targets, which for our 2022 and 2023 drilling. And here is the plan map that shows that. The red dots represent our 2023 holes, and the blue dots represent our 2022 holes. And as you can see, we basically focused on increasing the strike length of the deposit, both to the west, the east, and out into the lake, west and east into the lake. As well, we had holes that showed that this thing remained open down dip at depth. And as well, based on the geological model, we found that this main now 15-kilometer long horizon pops up again to the south based on folding. And these represent a blue sky opportunity to basically possibly repeat this whole scenario.
Sorry, Trevor.
Sorry. And as a result, I'll just say that we had 145 holes drilled, 56 were for infill, basically to bring a lot of the inferred resources into indicated as much as we could. 75 were step outs to increase the overall size of the resource, mostly along strike at depths of less than 300 meters. And we had a series of holes, with reconnaissance holes, which opened up these new zones here. This is a kind of a dog's breakfast slide, excuse me, but it just gives you an idea of some of the intersections that we managed to get. Basically, on the order of some very high grade intersections at less than 80 meters depth, basically of like 31 meters of about 1.2% copper, 0.8% nickel, 0.07% cobalt, plus about 1.5 grams per ton palladium and about 0.25 grams per ton platinum. That is approximately when you get the massive sulfide horizon, the main massive sulfide horizon, that's basically the tenor you'll get.
You can find this on our website, and then you can expand it as much as you want so you can actually see what it says.
Yeah. As well, we did a fair bit of prospecting and surface sampling on our state claims surrounding the mining lease, and uncovered new drill targets to follow up. And in September, we managed to drill test on reconnaissance holes One of the very encouraging ones, which showed that the east zone and what's called the A51 zone extend further to the east out into the state ground. And there we managed to, in September, to actually drill that with some very good results, which are still pending, we think. Pardon?
Covered by overburden, or
No, it comes right to the surface. You can see the Gosens. These are all Gosens here. And also that 15 kilometer, that is, can we go back to that slide perhaps? Here. You have Goss on the surface basically from here to here, and from here to about here. And then it starts, you don't see it on the surface, but it's very close.
how deep is the deepest hole?
The deepest hole, let's go back there. That's a good question. This hole here was about 1,100 meters deep. And it was important because it showed that from a blue sky perspective, this thing just keeps on dipping and keeps on extending at depth.
Talk about that.
So we'll talk about metallurgical recovery. We are basically have a continuing metallurgical program. On the left side here, that is the historical recoveries, so which were reported in the Starfield Resources PEA in their original resource. And then what we did when we put out our 43-101 resource in 2022, we took those numbers here and we took the material that the Starfields we inherited from them, and we did some more extraction tests, and we managed to show that you could extract palladium and platinum at these rates here. This is a very conservative number, and that's the number that our independent model accepted when they were defining a resource. And then since 2016, we've been doing flotation tests, completing two concentration flotation tests, and have managed to create what we believe a potentially saleable high-grade copper concentrate of over 30%, about 60 grams per ton platinum plus palladium, plus a lower grade nickel cobalt platinum concentrate or bulk concentrate. Yes. Yes, absolutely. They do float well, but not less so with the nickel bulk concentrate, and we're still working on doing some hydrometallurgical enhancement on that. Plus, the third concentrate that we've been working on this year for testing is to create a high-grade precious metal concentrate, because we have certain zones which are very palladium and platinum rich, but have lower nickel copper content, and there we have potential for creating a precious metal concentrate. And that work the report is still pending. I won't say any more about that, but I can't talk about the results yet, but that'll be coming out in the news release sometime before Christmas, and will be part of our next updated 43-101 report.
So I know someone's going to ask, so we'll talk about it. Our comparables, or where you can, kind of get an idea how we compare to what's out there. So Trevor, do you want to?
Basically, Chalice mining is in Australia. It is in Western Australia, and it is a comparable deposit to what we have up in Ferguson Lake. And although the grade is about half ours, but the tonnage is double. It is the same game, about a 30-kilometer horizon, and they're basically working on that. More closer to home is the Noront Eagle's Nest project, which is bought out by Wyloo Minerals for $617 million based on a feasibility study. They have, as well, do not have road access.
So, and their tonnage is significantly smaller than ours, but their grades are a little bit higher.
Yeah.
So Noront was bought out by Wyloo just recently. Glencore acquired Polymet. Just to give you an idea of what's happening in this space. So, capital structure. We're a very tightly held company. Our share price varies usually between $2.50 and $3. We're probably trading at $2.40 today, $2.35. I haven't had a chance to sit at my computer. What that looks like in a market cap is, again, $250 million to about $3 million. as I mentioned, very tightly held. Insiders own about 65%. When we went public, prior to going public, we did a private placement of $20 million between 28 high net worth individuals. Then we did a direct listing to go public. That was between 270 some odd shareholders for, I guess, total amount was 2.7 million. So we went public with $22 million in the bank. The TSX and the Ontario Securities Exchange wanted to take those founder shares and some of those early shares that were done in the private placement and put them into escrow and restricted. So what does that look like for us? 15% comes free trading every 6 months. And for us, that's April and October. It's not really affected our stock. Everybody that is a shareholder tends to be a long-time shareholder. So in terms of free trading, we have 49 plus million warrants. So our warrants are in the money. The strike price is $1.50 and they expire December 29th of this year. So there's already been some exercise of warrants back in July by insiders. There's also been buying by insiders on the market just last week. It wasn't a huge amount for us to put out a press release, but you can find the information online. Our board members, Rick Brown and Mike Weeks, both bought 5,000 shares in the market. I know 5,000 shares doesn't sound like a lot, but we don't have a huge volume. Our average volume would be about 7,000 shares a day. So, they bought a good percentage of that last week. So what that looks like for us is those warrants are about $15 million. So we expect that a good portion of that is going to be exercised and then brought into the company. So that'll put us in a really good cash position. As well, I want to mention, since going public, we've raised $18 million in the last 18 months. That's been through flow-through financing and charity flow-through financing, as well as that early exercise of warrants. I want to mention that out of that regular flow-through financing, the 4 funds that came in the first time, they came in the second time, and we're in conversations with them about potentially doing one before the end of this year. And the same 4 guys want to come in. When we talk about, whether they sold or not, most of them have held on to almost all of our stock because it's one of the things that looks the best in their books right now that's performing. Yeah, and then in terms of our corporate team, we have Trevor, who is a geologist with over 30 years experience, worked with Noranda and Falconbridge. He and Dr. Yang started working on the project in 2013. Dr. Yang as well worked for Barrick, Inco, as well Falconbridge. He worked for the University of Toronto, and he was also the exploration vice president for Zijin Mining Group, but also the chairman and director of the Sprott Zijin Mining Joint Venture Fund. So that's important because then our director, Rick Brown, managed the Sprott desk at China prior to coming on board with us. So that's their connection there. Mike Weeks has been around for, 25, 30 years. Some of you might know him. And then Mr. Shim and Ms. Yang happen to be 2 of our largest shareholders through a holding company and themselves personally. Mr. Shim is actually a Canadian entrepreneur for the last 35 years. He has medical clinics in the US, real estate ventures across Canada and the US, and his core business, which I think is great, is he does all the non-tin bottling for Coca-Cola. So you had Earth's Own oat milk this morning. We bottled it. Well, he bottles it, not Canadian North, just to be clear. And as well, their water products, Simply Orange is another thing they bottle. So that's his core business. So in a nutshell, what have we done? Well, we went public with $22 million. We raised another $18 million. We aggressively drilled over 39,000 meters. We updated a 43-101. And what we fully expect to do is take our 39,000 meters of drilling and then further update the 43-101. Our goal is to take a lot of that inferred open pit to indicated open pit and to have a 40 million indicated resource and another 60 million inferred to have 100 million tons.
That is our target, but this is based on an independent review by SRK. This is in a news release who we have contracted to do a technical review of the project, and prepare a new updated resource based on those holes.
So
And-
that means NI 4301, you've done
Yeah.
it all.
Yeah, we've done it and we're updating it. And so just to be clear as well, that's our goal. After this 43101, we do plan to have another drill program next year to help expand that. And then with the idea of moving to a pre-feasibility study after that. In terms of what we can expect of milestones, because I want to talk about that because we're very good at setting them for ourselves and checking them off. What you'll probably expect to see is obviously more warrants being exercised and cash into the company. We are going to look at doing flow-through, regular flow-through for sure. There might be another component there of charity flow-through. And then after that, we have our drill results. The final drill results are coming in the next couple of weeks. I tease if I let Trevor to stay like 2 minutes at his desk and not be on the road with me, he'd actually have time to get to it. Then after that, we're probably looking at some metallurgy.
The final metallurgical reports for the work we've done
There
this
we go.
year. Yeah.
And then, maybe some environmental, along with, in terms of what we tend to want to check
Basically,
off.
an
Yeah,
update on our permitting.
exactly. And then that 43101 that we expect to come out in Q1 of next year, some new announcements for what we're going to be doing drilling going forward. So that is what we're doing in a nutshell. And we'd like to open the floor to questions. Yes, go ahead.
You have so many, you've done so much drilling, you have so much historical data. You have an amazing property with so many different. If you ever decide to do mining, where are you going to get the capital? Do you have a major to back you up?
Sure. So let me just repeat that question so that we can hear it. So it started by saying we have a fantastic project. I just want to put that in there. And, if we do intend to mine in the future, how do we intend to do that? I think a really good way to say it, and I was on the road 2 weeks ago with our CEO, Dr. Yang in Australia. We had 23 meetings over 3 days. And just, to give you an idea, Wailu's from Australia, BHP's from Australia. He stayed on an extra week to go to Perth to speak with a major. So what I want to say in terms of moving forward, we're very good at exploring. Even myself, most of the companies I've worked with are exploration companies. I think we want to take it to that point where we have that 100 million ton resource, lay the groundwork for that pre-feasibility, but we want to find a strategic partner. I think that that's what the logical step is for this project, to find a strategic partner, somebody that has the intentions to put it into production. I mean, we're in a geopolitical stable region. We have critical minerals in the ground. We do believe it is going to be one of the largest, projects that has been that is not in production, that's sitting there. And so we do think that there's a really great opportunity for us to speak to and have that relationship with a major going forward.
We are in discussions.
What's your burn rate?
Our burn rate, when Trevor's not spending all that money drilling, is about 90,000 a month.
When I am drilling, this is the full disclosure, the drilling costs are about $900 a meter, all in, everything.
Yeah, but that's everything.
Everything.
Yeah. So, I mean, that gives you an idea, right? We
Yeah.
raised $40 million. We did almost 40 million meters of drilling. We did 39,000 meters of drilling. You can do the math.
Yeah.
What's your cash position?
So our cash position, we're probably sitting somewhere, under 4 million. I don't want to speak to that yet because there is going to be an exercise of warrants. There is going to be, flow through financing. So that's probably going to go up prior to our financials, depending on the timing of everything.
Are you going to be at the prospectors?
Are we going to be at PDAC? Yes, we were at PDAC last year. We're going to be there again this year.
And we'll have core.
Yeah, that's what I was.
Frank, you're going to love this core. Everybody that comes by absolutely loves our core. So I really have to hurry up, as you can tell. So we're just going to take one more question. I'm going to take it from Paul, if you don't mind.
Question. How are you treating the cobalt?
We don't know yet. We are, in terms of metallurgical testing, it tends to go into the bulk concentrate with the palladium, with the platinum and with the nickel, because it is tied very much with the pyrrhotite sulfide. But in terms of that's about as far as we got. That we are in the process of having discussions about that with STS Lakefield.
So everyone, Trevor might not be around afterwards because he does have a plane to catch, but I do want to point out that Carl Philippe is here in the audience. He's actually one of our young geos that has spent the last 2 summers on site. So he's here with me tonight and he'll be able to answer questions, the technical ones, and I'll be here for the other ones. Sorry.
Well, thank you, Trevor. Thank
Thank
you very
you.
much.
Thank you.
Bring it up.
Yep.
You can go. Paul, you can.
We good?
Yep.
Thank you, Sophie. I really appreciate that. It's nice listening to her do something like that. It's cool. Our next presentation is Medexus Pharmaceutical, Pharma. It's listed on the TSX. The symbol is MDP. And with us this evening is Richard LaBelle. And here he is. He's their General Manager of Canadian Operations. And go ahead whenever you're ready. Thank you.
Thank you. Good evening, everyone. So, Richard Labelle, I'm leading the Canadian operation of a North American company. I'll show you more details after, Medexus Pharma. I've been here probably at the same time last year. I see many familiar faces here. And I kind of look at our press release and I say, gee, we achieved a lot over the last year. So before I talk to you, the one that it's the first time about who we are as a pharmaceutical company, I thought I should start with a quick snapshot of what we accomplished over the last few months. And maybe you want to put that in perspective to what we discussed when I was here a year ago. So to start, we first of all finished our fiscal year in March of 23, fiscal year 23. We broke a record where we finished with over $100 million US of sales, CAGR of 25% over the last 3 years. Subsequently, quarter after quarter, we had new record in terms of sales and EBITDA, as I will show you. We also signed last March, we're in the business of bringing innovation to Canada and bringing innovation to the US, as you recall. So we signed a deal with a Spanish company, Almirall, bringing a new product here in Canada. We also here to expand our portfolio. If you recall, we had another product, Ixinity, that we did submit to FDA, regulatory authority in the US, in June. And also we basically renew our credit facility with BMO in March, and we convert our debt in October entirely in cash. So that's kind of what happened since last time I was with all of you here. So that's kind of an introductory comment. So for some of you that wants to take note, I'll go back now and for the others also tell you who we are and why we may represent a great opportunity for someone to invest. Do you hear me well in the back?
Oh, yeah.
It's clear? Okay, thanks. Usual disclaimer, you can find it on medexus.com. So key highlights, as I mentioned, so we're in the business of bringing innovation to Canada and bringing innovation to the US. Pharmaceutical drugs that often are available in other parts of the world. So that's what we do. Our model is one of finding those unmet need and you know, grow the business accordingly. Like I mentioned, we finished at 108 US. We're North America, so all the numbers you'll see here are in US dollar. So we finished over 108 with a CAGR of 25% over the last 3 years. We have 17 brands currently on the market, a staff personnel in field of around 40 people, half Canada, half US, and 10% of shares are owned by management. Our model is quite simple. We either grow organically by taking the portfolio of those brands and make them more aware by the medical community so that those products are prescribed because there is unmet need out there. We do some business development activities. We acquire products that are available in other countries. And last but not least, sometimes we tweak some of the product we have and add new indication, if you want, to it. We're not in the business of research. We're not doing phase 1, phase 2 trial. We're generally taking product that are either phase 3 or commercial and about to be on the market. Then we submit to Health Canada and we submit to FDA. So that's our model. Management team, we're 5. Ken, our founder and CEO, based out of Toronto. Marcel, our CFO, based out of San Francisco. A lot of expertise in the pharma world. Mike, my colleague, who does the same job as I do, but for the US, so he's managing the US part of the business. Myself, managing Canada, and Ian, our general counsel, based out of New York. So this is, I thought I should bring to you a sum up of our key brands across North America that we have right now on the market that represent it's not all brands, but that's clearly the main 4 sectors, being in hematology, rheumatology, rare disease, allergy, and dermatology. So I'll briefly cover each of them just to give you a better sense of who we are.
Which rare disease of the brain?
Yes, that's one of them. You're right. But rare disease also, for example, in blood, like with IXINITY, but yes, for brain. I'll get there. Remember. So basically, our approach is one of being focused. Just to give you some perspective, there is just here in Canada over 30,000 primary care physicians. You have the same amount, roughly, in specialists. So there's no way you could cover all those people. So you really have to go for a niche approach where you say, who are the prescribers? Could we approach them in an economical fashion so that it makes sense to bring innovation, make it well known, and be prescribed the way it should be? So that's kind of the targeted focus approach we have. And obviously what we do is we focus in areas where we're already there and try to circle around those to leverage the synergies of our field force presence. First one, IXINITY, one of the largest one in our portfolio. This is for hemophilia B, factor 9. So it's basically helping controlling the bleeding of any patient proactively in prevention. And if you recall, when I was here last year, I said we're really, really shooting for doing a trial so that we will get expansion with a pediatric study that will open another 30% of the market. Actually, we submitted last June, and we're expecting some decision from the US regulatory authorities by roughly March of next year. And the product obviously is protected also until 2028. The second one is Rasuvo. This is in rheumatoid arthritis. This is methotrexate, a well-known molecule, except that we have an auto-injector where we own roughly 85% of the market, still steadily growing. We have this equivalent in Canada called Metoject. Those are pre-filled syringes where we also own a huge chunk of the market, making life easier for those patients where there's a double concentration of the product and easier injection with the AutoPen in the US. But again, look at this in terms of the type of share we had going, for example, fiscal year 2016 to 23, going from 50% to 85% market share, obviously driving growth with such portfolio. The third one, to what you just mentioned in brain surgery, is called Gleolan. So what is Gleolan? Gleolan is really an imaging agent. So if somebody is unfortunately stuck with glioblastoma, meaning cancer of the brain. They basically take our product. This is a liquid. You take 4 hours prior to surgery. And what it does is under blue light, it has phosphorating properties on cancer cell. So it helps the surgeon to do a maximal safe resection of the brain, trying to remove as much as they could without obviously damaging the other part of the brain, because we're talking about elocution, about walking, everything, right? So, this product being approved both in Canada and the U.S. Actually, I even attended one surgery here at McGill. Really helping a neurosurgeon to push further the boundaries of maximal safe resection. And again, the product is going very well, and slowly healthcare professionals are teaching each other how to further use this tool to their advantage, trying to push further the limit of this of bad disease. Another one is Rupall. Rupall is specific to Canada. This is a second generation antihistamine for seasonal allergy, periannual allergy, and urticaria. Totally different field. And we launched that little brand in 2017. And still after more than 6 years on the market, we're still growing at 38%. So going extremely well. And obviously all this generating sales, generating cash flow, helping us keep building the momentum with the vision of obviously getting bigger and bigger. So this is who we are as a portfolio. Basically, the BD approach is one of securing a deal in which we put a minimum amount up front, like a very small amount up front at signature. But in return with the partner, as we're growing the business, provide royalties, a percentage of sales, and sales milestone, so that we could share success. So they have the innovation, we have the capabilities in Canada, we have the capabilities in the US, going from a regulatory submission to reimbursement by public, private payers, PBM in the US that help, and sharing accordingly the profit of such great innovation, obviously for the benefit of the North American population. So that's kind of the model we're applying. So in terms of pipeline update, as of last year, so we keep focusing on triosulfan. It's still in our card. I know a year and a half ago, we certainly got big hiccup there. The drug was submitted at FDA by Medac, one of our partner. We kind of struggle with the way the submission was done. They're all back to doing their own work of reshuffling the data the way it was requested by FDA. The goal now is to get that resubmission done by mid-24, hoping that generally they render a decision in 2 to 6 months after that. And that's for the US. And this represents an opportunity of $126 million US at peak. So that's for the US. While we're doing that, we have that drug in Canada. We launched it a year and a half ago. And Princess Margaret in Toronto just showed in a registry that you have a survival rate improvement of 25% over 2 years by using such product in stem cell transplant rather than using common gold standard product busulfan. So clearly an opportunity we don't want to give up, but if we unlock that one, that will certainly support us a heck of a lot. The other one is Ixinity, pediatric indication, hemophilia B, that I discussed before, opening a 30% more market. The third one is Gleolan. We talked about brain surgery, but glioblastoma, but there's also meningioma. Meningioma is basically other tumor that are not malign, they're benign. And so we're working on such indications. TH, That's for poor kids suffering from GRA, juvenile rheumatoid arthritis. So we're working to bring back this product in North America. Worldwide, there's a problem supply, so we're working on that one. And last but not least, this is the deal for Canada that we just signed in March. This is something that I'm sure you all hear about, like those TV commercial or had on radio about nail fungus and go see your physician to be treated and all that. So we're coming with another option of this, with a once a week rather than once a day treatment. We're in the process of submitting it before year end to Health Canada to get an approval next year. And this is a good fit with one of our sales force because we're covering dermatologists with urticaria already. Now we will cover it for that brand. So going back to my targeted approach of synergies. So that's the pipeline. So now the financials. So basically what you see there is a CAGR of 43%, right, over the last 4 years. At the bottom, our fiscal year finished in March. So now we have two more results. We have June 23 and September 23. We just published last week, actually. And we finished at 31.6 and 30.3 US, right, sales. So if you take the last 4 quarters, you're at 119 already rather than 18. So we keep going up. And if you look at the EBITDA, we generated. We went in June 22 at 1.9 million, and we're now more in the 5, 6, 7 range of EBITDA. So this is the progression we have right now. Despite all that, despite this great growth, if you do some math with the share, despite the fact that we convert our debt in October, all cash, that partly from our BMO credit facility with that we had, but also partly from the cash we generated, we're still at 0.75 ratio enterprise value versus revenue, and still in the 4 to 5 time only range enterprise value versus EBITDA. So I'll leave it to you if you see it as a great opportunity. BMO, what I discussed before, we had in June a loan facilities of 53 million potential, of which we almost took all, like 56.5 to the with the revolving loan, of which we took 54.5 because we took 18 million out of it with the cash flow to pay the convertible debt of 37 million we had. So now we have a clean sheet, no convertible debenture at all. Nothing has been diluted as we're speaking right now. The net debt is around like 52 million and an enterprise value of around 88 million because of that. And last but not least, we are followed by many analysts, 7 analyst coverage. That's rare, I guess, for a small cap like we are. We did a bought deal right after this that generated 7 million. So right now we are in a position of like around $7 million US cash in the bank, if that question comes in. And I guess that's it. So it sum up: sustained quarterly, both revenue and adjusted EBITDA growth, commercial execution on current portfolio that I show you, the type of growth we have, in licensing opportunities we're striving for, and promising pipeline ahead.
Thank you, Richard. Appreciate it. I'm going to take a couple of questions and then I want to get the last story in. Richard's going to be around after, so yes, ma'am.
How possible is it that treosulfan will be admitted by the FDA?
So the question is what's the level of probability of an approval of treosulfan in the US by the authorities? So I wish I would have the exact number there. All I could say is that normally FDA say yay or nay. And in this case, they said twice, go back, do your homework in terms of the way you should present the data. That was MedAct. So we worked a lot with them. Now we're doing everything we could so that it is put in the way that it should be put. This product is available in Europe, it's available in Canada, and we want to ensure that we find a way to secure the US authorities so that they have this level of comfort for approval.
Okay, and if it is approved, then what do you think the amount of the share would go up because of that?
Cut the tape, cut the tape. Sorry. They're not allowed to tell you.
Well, that was a good question.
One last question, and then we're going to do the next one.
Yes.
Go back. Yeah, right there. So I'm just trying to understand, you guys did a bought deal at 10 million.
Yep.
Your net income for fiscal quarter is 1.1 at a loss. It's 2.9 at a loss. You mentioned at the beginning of the presentation, you're generating some form of cash flow. Why do you guys need to raise money?
We didn't raise money. We we did the bought deal just after, because obviously we were in a cash position where we converted the entire 37 million US, right, of shares that could have been the debt that could have been converted in share or in cash, right? At that time, we got this 10 million additional Canadian or 7 million US about. So now we're in a position of 7 million cash flow. So this is where.
I understand that. Why did you do that? So, other than using that cash to convert the convertible, why did you guys get that?
So because right now the net of all of this is we are in a position as we're comfortable with 7 million in the bank that we could control, right? Where we sit in terms of potential new BD opportunities.
So you're investing that into new growth opportunities.
Yes, and managing business operation, both of them.
So it's working capital.
Yeah, it's there. Yeah.
What's your share price now?
It's of today, it's 180, and all the maths there are at $2, so it's even lower than 0.74 right now.
And what do you expect to be profitable?
We have positive EBITDA. Obviously, we're in a mode where we want to reinvest to grow. So we're not as much as short-term profitable, but more reinvesting and keep growing and generating more EBITDA.
It takes years, right?
No, like it depends. Like the $100 million of market of Tricondiv could be a game changer, huge game changer. Terbinafine that we're about to launch is another one, accelerating growth. So I wouldn't go too much in detail in terms of future, right? Like I all I can share is actual, but let's say we're in good, healthy position right now.
No, merci beaucoup, Richard.
That's it.
He's going to be around, so you can talk to him after. Now, this next company is new to the market. They've only been listed for 10 months. It's a great story, great properties. With us is Kevin Philo, which I met Kevin, he's their CEO, and the top position is the president and CEO of the broken the deal.
Just you two. Oh, we got two.
I have 3 boys, so I really don't need a mic, but.
It's gonna be on the recording.
Okay, and just
I'll
forward.
tell you.
Great, thanks, guys. Thanks, Paul.
Like 1,000 years ago.
Thank you.
Kevin, you're going to
Stick that there.
Yes,
Yes, come on up, buddy. Come on up. Are you guys awake? You've had a glass of wine or two. Everybody's rolling. Just take a deep breath. I'm Natasha. Thank you to Paul and Sophie for having us here today. I think there's a pretty common thread between these 3 companies in terms of showing up, delivering, and executing on management's plan. And as I was looking at where we fit into that picture, I think even though we've only been trading since January 4th of 2023, I think we've done an awful lot at a much earlier stage in terms of where we sit in the resource industry. Mink Ventures is our company. It's actually an acronym of 4 names of some of the founding team. This lady here was asking me earlier about the company and the name, and the European Mink is sociable, curious, and loves to explore. So it sort of fit the acronym at the time, and nobody had taken the name, so it worked out really well. Forward-looking statements. You know, I think at the exploration level, you really have to enhance that. So we try to keep Kevin contained. He gets very excitable. I'm going to let him talk about the rocks. That's his favorite thing. But yeah, it's we're pretty excited. We're pretty excited. But I'm really going to stick to this slide because people often ask in exploration companies, how do I pick? There's so many of you. How do you know what to buy? What's important when you're looking at these? My background is environmental science, but also I worked in capital markets. I helped launch the CSE stock market. I've worked in deep capital from trading all the way through. So I have really unique Rolodex, which is very helpful when you're running a junior exploration company. That goes to your team. So if I were to say 3 things you should look at, it's who is the team and what capabilities do they have? What does your share structure look like? Because in all of the many years, despite my still blonde, not white hair, I've seen a lot of companies blow up over share structure, and that is something that I'm extremely disciplined on and very, very rigorous with. So when we get to that, I think you'll be pleased at the stage we're at, even though we're new. That's something we do take into consideration. And then projects. Mink has 2 exceptional projects. Both of these projects really have no business being in a small, tiny junior like ours. The reason they're there is, again, because of our team. We have deep roots and connections in capital markets and with other industry players, and we were able to negotiate some exceptional deals. And certainly in markets like this, that's what you need. You need to buy these projects when there's a moment and an opportunity, and you need to be creative in how you structure those deals. And I think both of them really we were able to grab because of how we approach the vendors and what ways we were creative in making these things fit. We're in we're grateful to Mark Selby for calling the Timmins Nickel District. We are just 65 kilometers south and west of Timmins, or actually north and west of Timmins. Sorry, I'm thinking Warren. And so we have all of the access, infrastructure, resources, people, roads, green hydropower, and our primary listing project surrounds Glencore's Montcalm mine. So they plow the road for us, the power's on. I tell Kevin, bring the guy some Timbits. He's probably lonely up there.
Yeah.
They make it pretty easy for us to get to and from our project, and surrounding a significant asset like that is obviously, you want to look in the right place. That's obviously been permitted and things like that. We are very fortunate to work in First Nations grounds. It's covered by the Waban Tribal Council. They have a leading edge platform for negotiating memorandum of understanding and how you operate in the business. It's a very, very clear guideline. Our friend George Peary, who was Minister of Mines, helped them put that together, and it's a very nice, clear-cut situation. So we feel very comfortable with where we're at with our regional situation. Strong fundamentals in nickel, copper, cobalt, well, critical minerals. I mean, it's the new gold, really. And it has been for the last little bit. We will tell you a bit of background, staked this project in 2017 in a private project generator that we had, and we just couldn't quite let it go. So after a few incarnations, we were able to get it back. And again, that comes to having a team that knows the project and knows what that vendor might need to get it back. We've raised 1.3 million in the past, not even 12 months.
9 months.
Last 9 months. That is no small feat in some of these markets, especially for a brand new company that is at the exploration stage. And we only have 17.9 million shares outstanding.
Could you say that again, please? And please say that. 17.9 million shares.
That's
There are many
true.
mining companies out there. There's a lot of stuff they're saying. So this is a great
Again,
opportunity. Sorry.
about 25 years I've been saying capital structure, it's everything. And everyone goes, oh, look at all the money flowing at us in good times. Well, this is the time when it really shows its depth, and it takes discipline, and it's very hard sometimes to keep it at that level. But we own, not just us, but within our group, about 15% of the company. Kevin and I personally have placed probably 80% of that, of the investment that we've raised. We've got about 60% of our money has come out of the UK. We spend a lot of time on Zoom and a lot of calls and do all of that necessary work. As Paul said, the capital structure is quite unusual in this market. We are trading at 18 cents. I think we're one of the very few exploration stage companies that has a nice green trending line upwards. This time last year, we were 8 cents. We're at 18. Every one of our shareholders is made money this past year, and that's something that we take seriously because, you know, we want to make money. We want to make you money, so that's important. There's 1.5 million stock options outstanding. We have warrants, 9.4 million. Those are 3-year warrants ranging from last December straight through till June in another year, and their strike price is 20 and 25. So at 18 cents, we're not too far off. We've got some drill programs we're going to talk about, and we see that some of that is very likely to get exercised in the next 12 months at that 20%, because after June, they go to 25. So that would bring in potentially 2.3 million into the company with no additional dilution. The reserve for issuance, as I said, we've done 2 project deals this year. We feel a little bit like we scooped them unfavorably, but very favorably to us and our shareholders. We use some of our paper, not a horrendous amount. 750,000 shares will go to US Copper, who we optioned our Warren project from, and the other 800,000 goes to Voltage Metals, which was part of the acquisition cost. So fully diluted, we're sitting at 30.4, and as I mentioned, management has 15%. In terms of the people, I'll just tell you a bit about Kevin. He's a pretty modest guy, even though he gets really excitable about rocks. Many of you probably are very familiar with the Detour mine. Kevin has always been very entrepreneurial, and he and his partner Ingrid Hibbert at the time through Pelangio acquired that mine from Placer with the help of Franco-Nevada. And everybody knows the story of where that sits now. It's one of Canada's biggest gold mines. And while not many people know that he was on that team, he definitely was a huge part and a risk taker to go for that. So you need that kind of thing when you're doing exploration, and kudos to you. Joel Ahrens is our CFO. He's at MNP and Timmins. He's new. Paul, our other guy, retired. You know those guys, they take their time. So he's new to us, but doing a great job. Ingrid Hibbert, who worked with Kevin at the Detour situation, runs Pelangio, and JC Sinamore, who some of you may know, is CEO of Vanstar Mining and Imagine Lithium. So he is an former investment banker, CFA geologist. So really the full gamut of skill sets. And then Matt Loco is a communications specialist. So that's a team. The MINK is 4 of those letters, and that's who we are and where we're at. Okay, I'm going to hand over the pretty maps to Kevin here. He can tell you a little bit about it. What I will say is that in terms of timing and strategic developments going forward, we've just finished a small drill program at the Smallcom project. We expect assays to be out in the next couple of weeks once we get them back. We're doing a big geophysical program that will fully meet all of our exploration commitments for the property acquisition. Then we'll own it 80%. The other partner has a 20% carried. And on the other project, Warren, which we just acquired in June, we are moving there in late December, early January, and we'll begin a drill program there as well. These are fully funded, and the Ontario government has just given us just under 80,000 in exploration grants for Montcalm, and we've also applied for further grants for the Warren project. So
Graciously gave us 80,000.
graciously, thank you to them. So I will flip the switch for you, Kevin. Go ahead if you want to.
Obviously, our projects are in Ontario, and it's around Timmins, about 500 miles north of downtown Toronto. We're located in the Abitibi Belt, which is the most prolific producer of metals, gold in Quebec and Ontario, and it's produced most of a large portion of the copper and zinc production in Canada. Next slide.
It all pre-Cambrian?
Sorry, it's Archeanage rocks.
No, but the rock.
Our rock,
20 years.
how many years old?
Just quick, I wonder how far the pre-Cambrian rock extends
From Chibougamau to west of Timmins, about 800 kilometers east-west. My memory serves me correctly. I haven't.
from Kirkland Lake.
Ah, there you go.
Oh, okay.
You two can chat after. Okay,
This is just a quick map of the Abitibi Belt, and the dark blue head frames are nickel deposits. You'll see there's not too many of them. The one in Montcalm and our Warren project, they are gabbro-hosted mineralization opposed to volcanic komatiitic-hosted mineralization, okay? And we really like gabbro-hosted nickel, so that's our focus, okay? So just want to differentiate that. Next slide, please. This is just a topo map of where we're located to give you some perspective on where there's downtown Timmins where the two highways intersect, and our Montcalm is 65 kilometers northwest of Timmins, and the Warren's about 25. The reason I want to tell you about this is we're about being cheap, and everything we do here is super cost effective. Our drilling costs all in are about $230 a meter. That's drilling, geologists, food, toilet paper, the whole 9 yards. It's $230. You drill for $90 a meter in Timmins. Well, the other reason we're here is because proximity to mills, power line, infrastructure, and some of the biggest nickel mines in Timmins, aside from this recent discovery, have been in the order of about 2 to 3 million tons. That's it.
Is it all Q core?
Sorry?
Q core, is that what you meant?
Q core.
Core,
We're drilling NQ.
Q.
NQ core, yes. As I was saying, 2 to 3 million ton deposits in Timmins. We'd like to obviously find something much larger. That'd be great, but 2 to 3 million tons, you can make money in Timmins. There's mills nearby, there's roads, infrastructure. We like that idea conceptually to be able to do things very cost effectively. So it's very important for you to know that in the event we even have a small deposit, you've got a good chance to make money on it. So, this is just a Google Earth image of our Montcalm property. You can see the mine over here. Power line coming in, it's still electrified. The mine's on a care and maintenance basis. You can see all the timber access roads and drill roads. So we have super great access. This road's plowed all year round by our friends at Glencore. There's a fairly significant rumor on the streets of Timmins that mine will be up for sale. Still got a million tons sitting in the bottom of the mine. There was a little boo-boo by a mining engineer who took out part of the crown pillar with his last blast. But there's a chance to reactivate that mine. It's not worth it for Glencore because $400 million is probably lunch money for them, but for smaller junior, that may be a lot of money. In the event that mine gets reactivated, it'd be great for us because we control the lion's share around the mine, including some of the best geology, which is located at the mine and on our property. This is the Montcalm Gabbro complex. In black, covers 120 square kilometers. Our little property covers 40 square kilometers. The mine property is roughly about a little over 6 square kilometers. The baby blue image is the Gabbro phase of the intrusive. It hosts the Montcalm mine. There's 5 square kilometers of that blue area inside the purple mine area, and about 10 square kilometers on our side of the fence. I'm going to digress just one little bit to tell you a little bit something. If you know where Lynn Lake, Manitoba was, there's a mining company called Sherrod Gordon Mines. They're the 3rd biggest producer of nickel in Canada from about 1950 something to early 70s. Their A mine was hosted in an area of 4 square kilometers. Square kilometer less than this area. That mine produced 30 million, it had a reserve/resource of 30 million tons in about 10 or 15 lenses of nickel, copper, cobalt. So that just puts it in perspective that these Gabbro-hosted things have a series of lenses, both disseminated, stringer, and massive sulfides, okay? But I just wanted to
They look like
outline.
that. Yeah.
That's an old slide of the Montcalm mine. The production there was, I should tell you a little bit about the background. A fellow by the name of Norman Keevil Sr., you might have heard of him from Teck. And his geological team discovered this mine in the 70s. They outlined 2 million tons. It sat idle for quite some time, almost 20 years. A little Finnish mining company called Outokumpu Oy out of Finland showed up. And within 18 months, they took this from 2 million tons to 7 million tons. Series of stacked tiered on echelon lenses that subsurface to about 400 meters. The mine has only been drilled down to 400 vertical meters. For some reason, Glencore, Falconbridge, Xstrata decided not to drill any deeper. I spoke to the mine geologist. He was a bit perturbed at that, suggesting there's significantly more potential, both for disseminated mineralization, stringer, and massive sulfides. I digress. Be cool.
Yep. Moving on. Okay. Moving on.
Split that back one more time.
Oh, really? Okay.
One more.
Oh.
That's just some of the grades. So, you know, these are great grades in nickel mine. The average grade was about 1.25, but you can see some pretty great grades, better grades in the mine. And some of the new lenses might be bigger and better. So, next, go ahead. Next.
Oh, sorry.
Oh.
There you go.
This is a compilation map of our holdings. There's an airborne background magnetic map, and we're doing something very different. Everybody did what we call airborne electromagnetic surveys and ground EM surveys. And these nickel deposits both have disseminated, stringer, and massive. Disseminated and stringer are not necessarily going to be seen by the electromagnetic surveys because they're not conductive enough, okay? IP, which will show us both stringer, disseminated, and massive. Right up here, there's a magnetic bullseye. Some geologists from Falconbridge, Tech, drilled a hole in this magnetic anomaly with no EM response whatsoever. Nickel minerals are magnetic, you know, and they're also associated with pyrrhotite and other magnetic minerals. So he took a chance. In this particular zone, he hit 20 meters of lower grade mineralization, 1,297 ppm nickel and 914 ppm copper. That there's higher grade intercepts within that, which we just showed the larger interval. So we decided we would look at some of these particular anomalies on our property with IP. And one of the really cool things we did, we used this proprietary borehole EM. The only time, it's never been used in the Abitibi before. The first time it's been used in the Abitibi is our property. The first time it was used in Ontario was at the Ring of Fire on the Eagle 1 deposit, and it allowed them to find the lower portion of the ore body. So we used this on our property, and not only did we find chargeability anomalies, we actually found conductive zones at 500 meters below surface. We have a bit of a problem here because there's a lot of conductive clay. There's only 3 outcrops on 40 square kilometers. So that makes it very difficult. We have to rely on geophysics. So we're plodding along here very systematically, doing IP, drilling a little bit, and we're very careful, as I said, with our money. We will have completed our earn-in December 24th of this year. And that's quite an accomplishment in this market in 10 months. So we're going to keep an eye on this and focus on developing more targets, and eventually, somewhere in the future, perhaps bring in a partner and watch what happens with the mine. Okay? So
I'm going to move us to Warren just quickly because I think we're getting close on our time, and I know that's the one you really want to talk about.
No, I want some questions for you too.
Of course,
Yeah.
yes.
All right.
So this just happened in late June. It didn't just happen, of course. There's a great story that'll make a great book one day. The sleuthing, it was in a family. Kevin reads obituaries. He tracked this down. We Facebook friended people. We were trying to get this project, and it took, oh gosh, a good 10, 12 months.
Yeah.
And finally, we figured out who had it, who owned it, made them a sweetheart deal. So late June, we were able to buy 100% interest of the red patented mining claims in there. It was 250,000 shares of Mink, 250,000 warrants. They chose not to have a royalty. They wanted the warrants. If we hit something, that's great. Money to us. Again, kind of a unique, very creative deal in this market. They always take a royalty. They didn't. And then 750,000 within, what do we have, 21 months, and we have to spend 300,000 in exploration. Now, just as Kevin talking about being cheap, I don't know, that's maybe not the right word, but we're working on the government again for an OJEP grant. So we have to spend 3,000 to earn in. If we spend 150, the Ontario government could give us 150, and then we've sweetened the deal further in acquiring 100% of this project. Shortly thereafter, the prospector owned this yellow chunk here, called us up and said, I have 0.5% of the existing royalty on that project and 8 claims. I said, well, how about 225,000 shares, and I'll take those both off your hands. Thank you very much. $37,000. And we now have some flexibility. I could go sell that royalty to somebody else. We've got some structures that carry on onto that project, which Kevin will tell you about. And then we were able to stake the green block around it for, $3,000 or something. So we've now taken this project to almost 10 square kilometers. And it's a very different beast than Montcalm. It's at surface. It's just polluted with mineralization. There is a rock in the other room you can pick up. That's about 2% copper, 0.5% nickel, and a bit of cobalt in there. So again, a nice deal and really interesting mineralization. Hasn't really been touched in 70 years. So we've got great upside potential. I'm just going to point out, I don't know if any of you have ever Googled the Pierre Lassonde discovery curve in terms of share price. If you haven't, go do it, because we're that company that's at the beginning stage of exploration. And then you have a discovery and you just watch that chart go. And then you get into development and it sort of changes direction a little bit. But the sweet spot is right where we're at right now with these opportunities. So with that, you go talk about rocks and
Okay,
this.
we were very fortunate. Like Natasha said, there was very little work on this property because it was stuck in a company, patent and mining claims from 1930. The last serious exploration program was 1957, the year I was born. So it's a long time ago. And anyway, it's a historical resource developed 385,000 tons down to about 60 meters, very limited information on it. The old timers trenched the living hell out of the place. They took 2 bulk samples out of the historical trenches. The historical trenches bulk samples grade 2.83 copper, 0.96 nickel, and a couple pounds of cobalt to the ton. The geophysics, some geophysics was done in recent years, very little drilling. The zones of interest stretch for 700 or 800 meters along strike, okay, in overburden. There's both max min, or EM and IP, and they're coincident, and they run for 700 or 800 meters. The shaft zone is almost a kilometer. It stretches onto our newly acquired state claims to the north. There has been no drill holes whatsoever on it. Some of the channel samples from the historical prospecting are running 2% copper. Incredible potential, drill ready, nothing left to do except drill holes. When you go onto the property, you'll see areas with the trenching, but you'll also see all kinds of gossans that have never been checked or trenched. This is just an amazing property. It's it'd be maybe 50 kilometers to the Kid Creek milling facility. Again, a gabbro-hosted mineralized zone. Natasha didn't point out that these gabbro-hosted things, the age of this particular